So after learning the impairment under PAS 39 for loans receivable, we learn now the impairment of loans under PFRS 9. Impairment of loans under PFRS 9. So how do we impair your loans under PFRS 9? So we said in our introduction before that your impairment of loans under PFRS 9 is based on your expected credit loss model or your ECL model, in which we use a probability of default. We use a probability of default. So how do we compute for your impairment of loans under PFRS 9? Still, there is a significance of impairment if the carrying amount is greater than recoverable amount. However, in PFRS 9, we weight it using a probability of default. So how do we compute here? Under your impairment loss in your PFRS 9, we just deduct the difference, or we just get the difference of the carrying amount and the recoverable amount. This is the amount of our total impairment. But we weight it based on the probability of default. So total impairment multiplied by probability of default will give us the allowance for impairment loss. So what is this allowance for impairment loss? This allowance for impairment loss is equal to the ending balance of allowance. Ending balance of allowance. So how do we compute for that ending balance of allowance? So that is already the AFIL based on our ECL, tama? But the question now is, what is the amount of our impairment loss? Because under PAS 39, whatever we compute, that is the amount of our impairment loss. However, here, we just compute the ending AFIL. So since we are using AFIL, you should have known by now that under PFRS 9, we do not use direct method. We use the allowance method because we keep an ending balance for impairment loss. We keep an ending balance for impairment loss, or the ending balance for allowance for impairment loss. Now, how do we compute for your impairment loss? We use the T account for your AFIL. So we have your beginning AFIL. We have your provision for your impairment loss. And then we have your reversal. We have your reversal in case there is a reversal of impairment loss. And of course, if there is additional impairment loss, that is again a provision of impairment loss. And then we get your ending. Okay, so in your impairment, we have learned before that we can only provide an impairment loss and at the same reverse it. But there is no recovery per se. Unlike in your doubtful accounts that once you write it off, you can recover it. Here, the recovery is not a recovery that we collect the cash payment, but the recovery is due to the increase on your future cash flows. And we call that your reversal, okay? So take note of our formula. We get the difference of your carrying amount and your recoverable amount to get for the total impairment. And then we weight it based on the probability of default to compute for the allowance for impairment loss. And that is the ending balance of allowance. Now, how do we compute for your impairment loss? Since the given only or the computed amount is the ending balance of allowance, we need to compute for your impairment loss. Your impairment loss is equal to this formula based on our T account, just like a T account of your AFDA. So your AFIL beginning, and then we have your reversal, and then we have your provision for impairment loss, and then we have your ending. Take note, guys, when do we use the PFRS 9 allowance for impairment loss or impairment of your loans? We use it only if ever you will see in the problem a probability of default. So, sir, is there a change as to the computation of carrying amount? No change. As to recoverable amount, sir, is there a change? No. Ano lang talaga nagbago dito? I-multiply natin siya sa probability of default at ang kino-compute natin ay AFIL. Okay, so let's have an example. Let's have an example. So let's say we have here a 5 million. So loan 5 million, 10% to ABC. after January 1, year 1. So on January 1, year 1, loan 5 million, 10% to ABC. The company estimates the following. Right? So let's say the loan is 5 years. The loan is 5 years. So the company estimates the following. 3 years na para hindi masyadong mahaba yung mga kino-compute natin. So we have here your estimated collection. We have 95%, we have 80%, and then we have 50% probability of default. So let's say this is 5%, and then this is 25%, and this is 75%. And then the market interest rate on every year. So we have 11%, 12%, and 13%. So this is year 1, year 2, no, this is 12/31 year 1, this is 12/31 year 2, and 12/31 year 3. Ayan. So again, ano napansin natin dun sa problem? Dito sa problem, at the start pa lang, nag-estimate na tayo ng ating expected credit loss. Nag-estimate na tayo ng expected credit loss. Guys, napapansin niyo dito sa example natin, nagbigay lang tayo ng tabular. But actually, may mga problems dyan, especially in your textbook, wherein mababasa ninyo yung mga amounts na ito lang yung collectible, pero this is the probability of default, etc. Okay? So here, again, on January 1, year 1, you loan 5 million, 10% to ABC Bank. The company estimates the following on December 31, year 1, December 31, year 2, and December 31, year 3. So the collection daw on December 31, year 1 is 95%, December 31, year 2 is 80%, December 31, year 3 is 50%. We compute for the probability of default. We compute for the probability of default. So what is the amount of AFIL? What is the amount of AFIL at December 31,
Sir?
year 1? Yes? Hello?
Parang nag-pause po yung screen niyo.
Ay, wala kayo nakikita. Wait. Ayan, nakikita nyo na?
Yes, sir. Ayan.
Yeah. Okay. Sorry. So, ito yung example ulit natin. January 1, year 1, loan 5 million, 10% to ABC Bank. The company estimates the following. So, ina-estimate na natin as early as January 1. Kasi nga, we expect the credit loss. We expect the credit loss. So, we have your estimated collection. That is the probability of collection based on the amount loaned. So, December 31, year 1, ang makokolekta mo na lang daw 95%. December 31, year 2, 80%. December 31, year 3, 50%. Tapos ito daw yung probability of default, 5%, 25%, 75%, blah, blah, blah. Okay. So we need to compute the AFIL at December 31, year 1, and at the same time, the impairment loss as of December 31, year 1. And then we also need to compute for the AFIL at December 31, year 2, and the impairment loss on December 31, year 2, just to show you the effect of your expected credit loss as compared to your past 39. So what is our general formula again? We first get for the carrying amount of our loan less the recoverable amount. Okay, the recoverable amount is the present value of future cash flows. Now, no problem with our carrying amount. Wala namang sinabi na meron tayong accrued interest. So, ibig sabihin yung buong carrying amount lang natin is the principal, 5 million. Next, what is the recoverable amount? This is the present value of future cash flows as of December 31, year 1. As of December 31, year 1. So what is our present value of future cash flows? We will only collect 95%. If we can only collect 95%, how much is the total collection? So the total collection is equal to 95% of 5 million. So 5 million times 95% is 4,750,000. 4,750,000. Okay, so if we have 4,750,000, 3 years yan, di ba? If we are estimating as of December 31, year 1, After 2 years, that is year 1, year 2, year 3, December 31, year 3. Ano ang ating N? Ang N natin ay 2. So how we will compute this? We use PV of 1. N is equal to 2. I is equal to, what is the original effective interest rate? 10%. Sir, bakit 10%? Kasi nga, sabi natin, pag hindi given yung yield rate, i-assume nyo na yung stated rate ng ating loan, yun din yung yield rate. Okay. Sir, anong gamit ng mga MIR? Pag nagbigay ng problem ng MIR every year, tanggalin nyo yan. Kasi nga, if ever we compute for the present value of cash flows, it is always based on the original effective interest rate. So in this problem, no given original effective interest rate, then the original effective interest rate is also the stated rate. Okay, so now we compute for the present value. So present value of 1, N is equal to 2, I is 10%. So did you get this value? 3,925,619.84.
Yes, sir.
Okay.
Yes, sir.
So that is the total impairment loss, guys. Total impairment loss. So 5 million less that value. 1,074,380.17. Okay. So after natin nakuha yung ating total impairment loss, ano na yung next step natin? Balik tayo dito. So after we get the difference between the carrying amount and recoverable amount, that is the total impairment loss, we multiply it to the probability of default so that we get the AFIL. So our probability of default as of December 31, year 1 is 5%. So i-multiply lang natin yan ng 5%. Remember, under ECL, ang sabi natin, we need to weight the amount of our loss. So how do we weight it? Based on the probability of default. So we just multiply it to your 5%. So how much is our ending AFIL? So 1,074,380.17 times 5%. Our ending AFIL is 53,719.01. So to record this one, as of December 31, year 1, what is our entry? We debit impairment loss, we credit AFIL. 53,719.01. Okay, why? Because kahit iti-account pa natin yan, meron ba tayong beginning AFIL? Wala. Meron ba tayong reversal based on the problem? Wala. Meron na ba tayong additional impairment loss? Hindi pa natin alam. Pero dapat daw ang ending natin ay 53,719.01. So kailangan lang natin kunin ito. So how much is our impairment loss then? 53,719.01. So guys, if ever it is the beginning of the period or it is the first time that you compute for the ECL, whatever you compute is also equal to your impairment loss. So dito sa problem natin, it is our first time to compute for the ECL. So yung AFIL end na yan, yan din yung amount ng ating impairment loss. Okay? That's for December 31, year 1. So how much is our AFIL on December 31, year 1? Sagutan lang natin to. How much is our AFIL on December 31, year 1, and our impairment loss on December 31, year 1. So our AFIL on December 31, year 1 is equal to 53,719.01, and our impairment loss is still 53,719.01. Okay, so that happens only if in case, guys, it is the first time that we recognize AFIL. Then we go to the second period. AFIL, December 31, year 2, and impairment loss, December 31, year 2. Okay, so what is our estimated collection now? 80%. So December 31, year 2 na tayo, di ba? So carrying amount, recoverable amount, this is the total impairment loss. So no problem with our carrying amount. It's still at 5 million. It's still at 5 million. That is our carrying amount. Kasi nga, eto, 5 million lang. Sir, bakit 5 million pa rin, sir? Kasi nga, take note guys, hindi pa nangyayari yung loss. Ine-expect mo lang to. Okay? Ine-expect mo lang. Sir, kailan natin masasabi na mayroon talagang loss na pagka guys, yung probability of default is nag-reach ng 100%? Yun na yung may loss talaga. Actual loss. So by that, talagang totally impaired na yung ating loan. May 100% impairment na siya. So yun lang talaga yung masasabi natin na nabawasan yung kanyang carrying amount. Okay? So expected lang to ha. Kaya ang carrying amount pa rin natin dito ay 5 million. Okay? So Baka kasi nagtataka kayo, Sir, nag-recognize tayo ng AFIL na 53719.01 nung una. Bakit hindi pa natin yung binawas dun sa carrying amount na 5 million? Hindi, kasi that is only an expected amount. So our carrying amount is still 5 million. Okay, we go now to December 31, year 2. What is our estimated collection? Our estimated collection is 80%. So 80% of 5 million, what amount should we collect? That is equal to 4 million pesos. Now, this we estimate as of December 31, year 2. Kailan ang ending ng ating loan? December 31, year 3. December 31, year 3. So 1 year lang yan. 1 year lang yan. So since 1 year lang yan, guys, so we use PV of 1, N is equal to 1, I is equal to 10%. I is equal to 10%, our original effective interest rate. So let's compute. So what is the present value? Did you get 4545, 454.55? 4545, 454.55. Nakuha nyo ba yan? Okay. So what is our total impairment loss? We have 454,545.45. You multiply it to the probability of default. O, bumalik tayo doon sa example natin. Year 2, our probability default is 25%. So times 25%. So what is 25% of this? We have 113,636.36. So this is our AFIL end. AFIL end. Okay, we make our T account for AFIL. So what is our AFIL beginning? Our AFIL beginning is ito, di ba? Kung ano yung una mo na-compute, yun yung beginning naman natin. 53,719.01. Do we have any reversal of AFIL? None. Do we have any provision for AFIL? We don't know yet. But we know the ending. Our ending is 113,636.36. So based on that, we can compute for our provision. So our provision is equal to 59,917.35. Okay, so to record this provision, we debit impairment loss, we credit allowance for impairment loss, 59,917.35, 59,917.35. Okay.
Sir?
So, yes.
Sir, dun po sa may PV, hindi po ba magiging basehan yung 4 million? Dun sa may ano, sir, yung
Ano bang minultiply ko?
5 million ata, sir.
1.1 raised to negative 1 times 4 million. Oo nga, no? Sorry. Ano ba yan? Okay. Sige, sige. Compute uli natin to. Thank you, thank you. 3,636,363.64. Yan din ba nakuha nyo? Yan ba
Yes,
Yes,
PV yan?
sir.
Okay. Ba't hindi nyo kasi sinabi kanina? Sabi ko nga, yan ba nakuha ninyo? Hindi kayo sumagot, kaya inassume ko na yung nakuha ninyo. 5 million less 3,636,363.64 is 1,363,636.64. Ayan. Times 25% probability of default. We have here 340 909.09. Okay. Palitan uli natin yan. Ang dami natin pinapalitan. 340, 909.09. Okay, less 53, 719.01. We have 287, 190.08. So, palitan uli natin to. Gagawin natin siyang 287, 190.08. Tapos, 287, 190.08. Ayan. Okay? Nasundan yung process dito. Kukunin muna natin yung 53,719. Yun yung ating beginning. Yung na-compute natin dito, yun yung AFIL end. Yun yung AFIL end. Gamit tayo ng kulay para hindi kayo malito. Ito. Ayan. So, ito, yan yung ating beginning. Tapos, yung AFIL end natin, ito siya. Ayan. Tapos, ang kailangan nyo nalang computein is yung ating amount ng, ayan, ating provision. That is the amount of our impairment loss. That is the amount of our impairment loss. Okay, so if you answer, we go back here. What is the amount of our AFIL? The amount of our AFIL is 340,909.09. And then the amount of our impairment loss is 287,190.08. Ayan. So, ayan. Okay. So, andyan yung PFRS 9. So, recap uli natin. So, under PFRS 9, what is the difference as to PAS 39? In PFRS 9, we use your ECL model. So, under your ECL model, we got first for the carrying amount and the recoverable amount. The difference is known as your total impairment loss. However, since this is ECL, we use a probability of default as your weight. Probability of default as your weight. So total impairment loss times probability of default will give you your allowance for impairment loss ending. Allowance for impairment loss ending. Since the AFIL end is given, you need to compute for the amount of impairment loss. So how do we compute for your amount of impairment loss? Using our T account, you have your allowance for impairment loss beginning, and then if ever there is a reversal, and if there is additional provision, ending. So since ang ending ang given, ang mako-compute natin at beginning yung na-compute natin, ito yung ating amount of provision. So the amount of AFIL, this is the amount of AFIL is the amount of our provision. Amount of AFIL is the amount of our provision. Now, since ito lang naman mostly yung sa ECL, sir, how about in our reversal? Same lang siya in your reversal, same lang siya. Ang problema nga lang dito talaga sa AFIL, yung probability of default. Take note, once the probability of default is 100%, we call that a lifetime credit loss. Lifetime credit loss. Lifetime credit loss is known as your impairment percent. Again, when do we use PFRS 9? We use PFRS 9 impairment ECL only if the problem provides for probability of default. If ever the problem does not provide for a probability of default, anong nangyari? Ba't nandito ako? If the problem will not provide for the probability of default, we use your PAS 39. If no probability of default. Tip in your PFRS 9, you make a tabular form. So the date, normally, date, and the estimated collection or collectability percentage. Hindi ko alam kung ano mga ginagamit ng mga authors dito, but normally it is expressed in a percentage kung magkano pa yung makokollect mo out of the principal, and then you use the probability of default. You ignore any market interest rate. You ignore any current market interest rate. The only interest rate that we use in your future cash flows is the original effective interest rate. So if there is a current market interest rate, please ignore that. So pag gagawa kayo ng tabular form nyo, ito lang talaga ang kailangan nyo. Estimated collection, tapos yung mga dates. Kung ilang dates man yan, kung 5 dates ba siya or whatsoever. Okay? So minsan kasi yung mga problems pa natin sa ating PFRS 9, mahahaba siya. So it's very worthy, naka-paragraph form siya. Ewan ko kung paano kay Valix, pero feeling ko worthy siya. Kasi kahit magbasa ka ngayon ng mga standards, napaka-worthy ng mga examples nila. So ang tip ko sa inyo para mas madali siyang computein, you make a tabular format of that particular problem. So that mas madali ninyong maintindihan kung magkano ba talaga yung makokolekta at magkano yung probability of default. Okay? So that's it for our PFRS 9 and PAS 39. And we already drew the line when we can say we are impairing based on PAS 39 and when we are impairing using PFRS 9.